Hey everybody, Smart Silver Stacker here. Hope you're doing well. So, an economic catastrophe, a US debt default, a crashing stock market, a collapsing real estate sector, an interruption to government benefits like SNAP and Social Security, and possibly even the breakdown of law and order itself. These are the things that US Secretary of the Treasury, Janet Yellen, has warned us that we may experience as early as June 1st. Now, what she's referring to there is what she believes could occur if the politicians in Washington cannot reach an agreement regarding raising the US debt ceiling. They need to raise the debt ceiling, borrow some more money, and keep spending it, according to the Secretary of the Treasury. But the thing that she doesn't mention is that all of those consequences she's warning of, they're probably on their way anyway. And it's because the real problem here isn't that politicians aren't borrowing more money and spending more money. The problem is the huge level of debt that we have already accrued. Because we're going on $32 trillion now in terms of the national debt. We will be reaching that number very shortly. And this is a difficult number to wrap your head around. One of the ways I've heard it broken down to kind of give you an idea of the scale that we're dealing with is to compare it to time. So if you take 32 million seconds, for example, that comes out to a little over a year. If you take 32 billion seconds, that's a little over a millennia. It's about 1,014 years. But if you take 32 trillion seconds, that's more than 1 million years of time. So this is truly a staggering level of debt that we have managed to accumulate here in the US. And in today's video, I want to break it down some other ways to kind of give you an idea of what we are as individuals, as citizens, as taxpayers here in the US on the hook for. How much do we really owe? And then also, I want to do a little thought experiment in today's video regarding the US national debt relative to gold. Kind of give you an idea of what some of the implications for the precious metals could be due to this onerous level of debt that we have managed to accumulate. So stick around because the numbers are pretty shocking and I don't think you want to miss this one. So let's get to it. Did you know SD Bullion is giving away a monster box of 2023 US Silver Eagle coins? Check out sdbullion.com/sweepstakes to sign up today. Okay, so let's get right to it and take a look at just how bad this debt crisis that we have brewing really is. So we're taking a look at the usdebtclock.org. This is a pretty good resource. I mean, all these numbers get pulled from official sources. You can see the national debt here is pulled from the US Treasury, the unfunded liabilities, also the US Treasury, and those are the two numbers I really want to examine in depth here in this video. You can see the US national debt, $31.8 trillion, getting to $32 trillion very soon. And essentially what this is just the accumulated deficits from the past years and past decades. All the money that we spent that we didn't have. But also, I do want to take a look at this number, the U.S. unfunded liabilities, because as you'll notice, that's a much bigger number, $187 trillion. Now, this includes not just the money that we have already spent that we didn't have, this includes all of the money that we are obligated to pay moving forward. So that includes Social Security, Medicare, veterans benefits, federal pensions, all these things that the U.S. government has promised to pay out. And it even tells you here the liability per citizen, $560,000, so a pretty big number. But of course, looking at just per citizen doesn't really make a lot of sense because not everybody in the U.S. pays taxes. In fact, a lot of people don't. And so, that's not the end of the story there. This is some data from Statista, and this tells us that according to the Statista Research Department, in total, about 59.9% of U.S. households paid income tax in 2022. The remaining 40.1% of households paid no individual income tax. So it's not everybody who is on the hook here because ostensibly you're really only capable of helping to pay off the U.S. national debt if you are contributing in the form of taxes. Now, to get an idea of how many households we have here in the U.S., this is the most recent data from the U.S. Census, and they give us the number of essentially just 124 million households. I think we can just round down for that one. And the reason this is important is we need to do a little bit of quick math here. So back to the debt clock. Remember, we've got about 124 million households, okay? And about 60% of those, it was 59.9, but we'll just say 60% are paying income tax. That comes out to about 74.4 million households. We'll just call it 75. I mean, we'll be generous here. We'll round up. We'll assume that there are some extra households. So let's call it 75 million households that are contributing income taxes. Well, let's see what the national debt, we'll just call it $31.8 trillion, which is an absolutely enormous number. And then we divide that by the 75 million households. And you can see that that means that for every household that is paying income tax in the U.S., there is about $424,000 worth of debt. So I don't know about you. In my house, we don't have an extra $424,000 laying around. And this gives you an idea of just how unpayable this level of debt is through traditional taxation. And I mean, ultimately, that's why I believe that it will be paid off using the printing press through debt monetization, quantitative easing. That is the way that governments who become indebted to this level typically resolve that issue. But I also want to take a look at the U.S. unfunded liabilities here, because this is really a more telling number. And if you want to figure out how much we are all really on the hook for in terms of the obligations that the U.S. government has already made, you know, all these benefit payments, everything that we will have to pay into the future, you can divide that number, $187 trillion, by those 75 million households. And you can see that that means that each tax-paying household in the U.S. is on the hook for close to $2.5 million. Now, if that doesn't tell you what kind of a crisis we find ourselves in, I don't know what will. I mean, these numbers are absolutely astronomical, and this level of debt and obligation can never be met through regular taxation. It is just not mathematically possible. There's not enough money out there. And you also have to keep in mind that if you try to crank up the tax rate to increase revenues to pay this off, you're really going to hurt revenues, because higher levels of taxes lead to a weaker economy. You know, that's just the amount of debt and obligation at the, national public level that all these households are on the hook for. This is a report from the Federal Reserve Bank of New York, their Center for Microeconomic Data. This came out recently, that reveals that household and consumer debt recently hit a record high of $17.05 trillion in the first quarter of 2023. So not only are U.S. taxpayers on the hook for a tremendous amount of public national government debt, we've got plenty of our own debt that we've racked up, private debt on our own in the form of mortgages, credit card debt, auto loans, student loans. I mean, the debt is absolutely exploding. It is extraordinary the amount of borrowing that has occurred, but this is all the predictable result of the Federal Reserve's manipulation of interest rates, keeping interest rates so low, artificially low for a very long time, encouraging all of this borrowing. And now we are headed towards a massive debt and currency crisis as a result of all of this debt. Now, I did say we would be examining what this debt means for gold. This is some data from the U.S. Treasury, the Bureau of the Fiscal Service, which tells us how much gold the U.S. has in reserves. And you can see here it is a very specific number, 261,498,926.241 ounces of gold. Now, let's go back to the debt clock here, and let's just say that we wanted to pay off the U.S. national debt in real money, not in devalued currency. This is an interesting thought experiment. Not that I think this is going to happen, but let's just take a look. So if you divide the $31.8 trillion U.S. national debt by the amount of gold that the U.S. has in its reserves, the official gold reserves. I mean, I don't know whether or not those are still there in Fort Knox and at other various places. People frequently point out that that may not be the case. There hasn't been an audit in a while, but we'll just assume that that gold is there. That would mean that in order to pay off the U.S. national debt with that gold, because that's, just comparing the amount of debt we have compared to the amount of gold we have, the price of that gold would need to be about $121,000 per ounce. And then, just for fun, let's take a look at the U.S. unfunded liabilities, the $187 trillion, and we'll divide that by the gold reserves. That would mean the price of gold would need to be $715,000 per ounce if we were to make all these payments in sound money, Of course, that's not likely going to happen. The reason that politicians like a fiat currency like the one we have is because they can just print it and spend and borrow as much as they want. They don't have the constraints of sound money like gold. And, gold right now is about $2,000 an ounce. It's actually a little less than that, but let's just call it $2,000. If you multiply the U.S. gold reserves, you see their actual market value today, about $522 billion. So, the U.S. debt is 60 times that. It's incredible. And the unfunded liabilities, orders of magnitude higher than the value of our real gold reserves. Now, not like those targets really mean anything. I don't think that gold is necessarily going to hit $121,000 or $711,000 per ounce. Although, what those numbers really illustrate for us is just the sheer magnitude of the amount of borrowing and fiat currency that has been created and borrowed into existence out of nowhere relative to the amount of hard underlying assets that exist in the economy. And, maybe we will see a gold price of over $100,000, but if we get to that scenario, or if we see the price of gold spike up to $700,000 an ounce, it's not outside the realm of possibilities. Of course, in a scenario like that, what that really means is that the dollar price of gold has simply become irrelevant, because it's not like gold, goes up tremendously in value. It's just that gold holds its value as fiat currency's purchasing power evaporates. And it's very likely, based on the levels of debt and unfunded obligations that we have, we may very well be headed in that direction. It's like Alan Greenspan warned us in congressional testimony, we can guarantee the payments, but we can't guarantee their purchasing power. And I think that that is the road that we are headed down. So, get your hands on some hard assets, some gold and silver. It's not financial advice, just telling you what I'm doing. But when you examine the sheer magnitude of the debt, I think that that becomes a pretty clear way to protect yourself. And it's kind of a no-brainer to get into hard assets at these points. So let me know what you think about this absolutely gargantuan level of debt that we have accrued. What do you think it means for the price of gold and precious metals and for the economy as a whole? Are we going to head towards civil disorder and a collapsing economy like Janet Yellen has warned us? Leave me a comment down below to let me know what you think. Thanks for watching, everybody. Stay safe and happy stacking, and I'll catch you next time. Smart Silver Stacker out.